patience. Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, ladies and gentlemen. Welcome to the market forecast. I'm still having problems with the opening credits here, and I do apologize for that. We're working on getting all of this taken care of, and hopefully very quickly. Welcome to the market forecast. It is Wednesday, May the 25th. My name is John Hoagland. Thanks for trusting me with your time as always. Our focus here is on trading and on context and on risk management and on patience. 7:30 durable goods numbers came out this morning, and the core orders last month was 1.2%, was revised down to 1.1%. They were expecting 0.6%. It came out a lot lower at 0.3%, indicating that the economy is continuing to slow. We're still waiting for the 9:30 the 9:30 EIA petroleum status report, and the FOMC minutes due out at 1 p.m. Central today. We also have group coaching today. I'm going to go ahead and put the link in. That's also at 1 p.m. Central. Typically, I usually start the group coaching on FOMC days about 1:05. I'll put the slide up, and you'll see it'll say starting at 1:05 today. So we all get the chance to maybe peruse a little bit of what the FOMC minutes are going to bring us. Stock futures this morning pointing to a lower opening, and still pointing to a lower opening after the durable goods numbers. I think the knee-jerk reaction was actually kind of inert, so a little digestion going on in our equities and in our stocks this morning. Anticipation of further slowing, we got that. It's kind of supported by Best Buy's Q3 profit warning that they came out with yesterday. As far as earnings, which seems to be, we're having a never-ending earnings season. Bank of Montreal this morning, Dick's Sporting Goods this morning, after the close, NVIDIA and Williams-Sonoma, just to name a few. The number keeps getting shorter as far as the number of earnings coming out every day. Crude prices remain firm after a small increase in inventories announced by the API. The EIA is expecting a small loss in inventories. By small, I mean 737,000 barrels in fewer inventory here in the U.S. As usual, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast, Market Recap, and everything we do. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live on YouTube. Look at them this morning, a few minutes ago, at the VIX, the dollar index, and the 10-year yield. The VIX is up about 2.3%, back up over 30 at 30.12. Dollar index up about 0.5%, 102.40, still kind of continuing its downward slide a little bit. And the yield on the 10-year a little bit lower this morning at 2.72%. Didn't get a lot of good sleep last night. Sure, we all had a little hard time with that. I'm going to say good morning to everybody. Good morning, Tachyon, Zachary, Marcelo, Charles, Terry, Tom, my brother, love you. Theo, good morning. Jack Doherty, it's always good to see you, sir. Shaw Cunningham, Force Driven. Chris Johnson, chilling with Dylan. Brian, Dan Trader, Alfred, good morning. Bill, Manuel Caesar, ZK. Haven't seen you for about a week. It's good to see you back. And we don't have to be the best at this. All we have to do is keep a consistent lens, consistent process. In doing so, we can learn the levers to switch, to move around just a little bit over time to improve our performance on this. Sarah Hall, good morning, and prayers and love to you as well. Good morning, Vince. Jan, Doherty, good to see you. Got the Doherty family here. We got the Hoagland family here. We got the Trader family here. It makes me warm to see everybody this morning. James Swan, good morning. I Print Money. Mid-Country Gaming, good morning. Finally going up today. Well, we'll have to see about that. Zachary, Frederico, Devon, Rusty Golfer. My spirit animal is the Rusty Golfer. Yes, I agree with that, Sarah. You are good at this. Excellent point, Sarah, for sure. David, James can't make group coaching, but love them sessions. Well, sorry, you're going to miss it today. We can always send you the recording if you email jhoagland@topstep.com. 3 Lions. Nico, it's good to see you. I haven't seen you in a while. Right. Isaac, Adrian. Ooh, that like button is lucky. Better hit it now. I'm going to need that today. Well, I hope it's lucky. Let's just put it that way. Dan Emmons, good morning. Tough day yesterday after being up 8K in the combine. Had to reset. Ouch. Ouch. Don't do that, Dan. Give yourself a percentage, and the higher, the more you're up, the smaller the percentage you're going to give back. Good morning, Joe. Oh, I hate that when that happens, Dan. And I'm not saying that I've never done that. I think my goodness, I'm doing okay today. Dan, back to 0. It's tough. CK, no white flags. No, we can't give up. That's for sure. Dorian, Equanimous Trading, good morning. And having a tough time, Dorian, as well. Nico, took your advice, took a little break from trading. Feels good sometimes. And it can help your vision when you do come back into trading. This is a market-based kind of broadcast here, but I can't go through this without talking about what happened in Ugarte, Texas yesterday. We all ask you to pray for peace every day. I know I ask you to pray for peace every day. We're gonna need more of that. Pray for those kids, and pray for the parents, and pray for all those that are affected by this. And I think to some degree, we're all being affected by what happened yesterday. And there's so many different ways and so many different things to pray for regarding this. Pray to end the sickness that creates these situations. It is absolutely horrible, and I'm deeply disturbed and moved by it. I may not even trade today because this is so upsetting, and I hate to kind of bring it up, and I don't want it to affect everybody, but I just feel like I had to say something. So continue praying for peace, everybody. Let's take a look into the charts today. I've done my research. I've done the homework. I'm perfectly able and ready to trade. Just not sure about mentally. Let's jump in. Okay, S&P's downside structure still remains. Volume and open interest yesterday increased. Okay, we had an increase in volume. Not tremendous. Just another effort for this market to recover off of lows. We added approximately 7,700 in open interest, another effort to pull us off these lows. We're putting together a valiant effort. At trying to put a low in here. It still seems as though this market is in balance. It's seeking new information. Awaiting new information. We're kind of stuck in short time frame land here. And this trend line has been, it comes off the all-time highs. We've got contact, we've got contact, we've got contact. It's been resistance, it's been support, it's been run through. We're back at that level now. I'm finding this an interesting spot for us to start to look for fish. Just going to look at the 30 because we know what the situation is in the longer time frame. In the shorter time frame for day traders, we are probably still continuing to look for shorts on strength. I haven't seen anything that's telling me that these efforts to rally have been all that successful. And every time we've rallied, we've lost open interest and volume. And I still see that as kind of happening. We're kind of at an important level here. Just as day traders, I'm going to be thinking about what I'm seeing today and what it means. The market has been continuing to move lower. It seems to not be doing as good a job, but I haven't seen anything that tells me that we're succeeding in rallies. As a matter of fact, when we look at this profile or this 30-minute chart, we put up a late spike yesterday. We settled in the late spike, which settlement is 39.40.50. And we are looking like we're going to open below the base of the late spike, even below where the late spike began. The base of the late spike is 39.35, right up here. And where the late spike began is down here at 39.27.25. So that gives us about an $8 range with which to perhaps look to find fish. The rule says if we open below the late spike, the base of the late spike, it's an indication of rejection of higher pricing. We're hanging right at the high of value from yesterday. Pretty low probabilities of us opening with a gap this morning. We've got some short overnight inventory. But we've been kind of taking care of old business for the better part of this week. Old business here, old business here. We did add 7,700 in open interest on this push off this low. And it's a little bit encouraging. But again, still, we seem to be looking at we still be kind of seeking new information. This market is very data thirsty, it seems to me. It's hungry for something to create some sort of change. And I'm hoping that change is going to be to the upside. I much prefer when the market goes higher and my 401k gets back to an upward trajectory. But I don't get to choose that. So today I'm trading what I see. We've got overnight inventory to the short side. I'm looking for opportunities to sell strength or continue to try and sell strength until something changes. FOMC at 1 o'clock today may mute our activity and our range throughout the day today as we seek, apparently acting like we're seeking new information. So at the base of the late spike, the opening of below the late spike, if we indeed do that, I mean, we could come back up here and open in the late spike, which would change my attitude a little bit. If we open below the late spike, that's rejection. If we open in the late spike, that's a possible acceptance of higher pricing. Opening above the late spike is acceptance of higher pricing. So right now it looks like we are rejecting higher pricing, but anything can happen here. We've got 30 minutes here before we open this market. So just be cautious, trade what you see. If we open in range and in value, step back a little bit. The better trade locations are likely to come as the day goes on. Crude oil. So we are range bound. It's almost trading in a straight line. Settlement yesterday was the same, well, one tick higher than the day before. Very close to settlement from yesterday, from that day, was last night. We're really kind of range bound. We're looking for new information here as well. We've got basically two dojis, which is indecision. We're looking for new information. We lost 600 in open interest yesterday. Volume was relatively okay. It was a little higher, but nothing tremendous. The market is basically telling us, all right, we're just going to idle here for a while until something changes. You got 2 dojis here. That's indecision. Range bound. Short time frame control. So let's take a look at the 30-minute chart. Where is our range? What are the extremes of our range? Well, I'm looking at 111.70, basically our overnight high today. Lines up relatively nicely for the high of our range for the past few sessions. It looks like we're already kind of coming off of that level. We're in the opening range, or just after the opening range. We'll see if the opening range provided an opportunity. And the low of this range is 108.60. So my rules are, when we are in range, we fade the extremes. We sell against the high, which lets us limit risk. If we are along the lows, we buy against the lows, which allows us to limit risk. If we remain in this range for an extended period of time, we've got a roadmap that tells us we're buying low and selling high, and buying low and selling high, or selling high and buying low, selling high and buying low. The rules for the range are you fade the extremes until proven wrong. Upon acceptance outside of the last 3 session range, we monitor for continuation, volume, participation, momentum. When we break out of a range, we go with the range. Right now, we're inside the range, so I'm going to be looking to fade those extremes. Again, 111.70, 108.60-ish. The low here from Monday. The low night before last. Just kind of ranging and volleying back and forth, waiting for new information. EIA today at 9:30. Maybe that's going to bring some change for us. Old business inside range, new business outside of range. Let's take a look at that first minute here to see if we have an opportunity off the opening range. So the opening range is 110.97 to 111.19. We've taken a look below the opening range first. If this opening range is going to remain the high of the day, we've got a pretty decent opportunity for this market to rotate back down to even the low end of that balanced range, down at 108.60. So a pretty decent opportunity. What are we looking at here? We're looking at 22 ticks of risk, maybe about 25 ticks of risk if you're going to get short right on the low of the opening range, and the opportunities to the downside. You know, it depends on your time frame, what you're looking for. But, you know, there's some decent opportunity for us to more than double our risk on this trade in a profit target. Right. Did we look at the 30 in crude? I don't remember. Yeah, we did. Okay. A little crazy today. Nasdaq. Similar but different, as usual. We've got downside structure, of course, remains. Volume and open interest higher yesterday, but yesterday we didn't do a very good, successful job of pulling off those lows. We did not end up with a late spike. It is the weakest of the indices and is presenting so right now. We added 3,900 in open interest, but ended up being a down day. Volume was okay. We got to remember we are coming into rollover in a couple 3 weeks here in the equities. Next week, I think we'll start to see some real effects of rollover. And here we go. The 30-minute chart. We ended up with some overnight shorts here, but we're in range. We're in value. Let's see here. We do not see that we had that late spike here in the Nasdaq that we did yesterday in the S&Ps. This market is presenting it as it has been for the year as the weaker of the two. We are opening, we're trying to move higher, back in range and value, holding some overnight shorts, durable goods out, FOMC today. We're in range, we're in value. I'm going to suggest trying to, again, stay very patient today. Inside that value area, let the first hour of trade establish itself and look for good trade locations on those extremes. because there's really not a big change in the value of Nasdaq, because we're kind of opening right in value. Not a big change in the perception of value right now. Gold. Yesterday, looking to kind of continue this breakout above weekly kickoff high. I think we were a little bit disappointed. We didn't bring in any really decent volume. And as a matter of fact, the preliminary open interest numbers are that we lost 9,800 in open interest. Usually we'll be looking for an addition in open interest and higher volume on a breakout of this magnitude. It was an attempt, but it was a rather weak attempt. All we did yesterday was dig some probably weaker hands shorts out of the market. Now we've taken that buying power away from the marketplace. We're back down below weekly kickoff high. And before the number here this morning, we had an inside extended trading hour range. Now that's been extended to the downside. Let's take a look here at the 30-minute chart. Look at all the overnight shorts we have here. And those overnight shorts are really looking for continuation. They're looking for an increase in business below weekly kickoff low to so that they can expect price to continue to push to the downside. It's taking regular trading hour traders to provide that opportunity for our weaker hand shorts that are already holding shorts in this market. How do I know? Well, settlement was up here. The 5 o'clock open was up here. We've had weaker hands, shorter time frame traders pushing price lower all night. Now they're continuing to get paid in the overnight session, and I'm looking at the weekly kickoff high here of 1851 as a really important level. If I'm short up here and we open and drive and we're holding below that level, this is going to be kind of an important spot for me. I don't want price to come back above this. If we do see price come back above this, there's a whole community of short time frame shorts that may get a little bit nervous and start to take those shorts off. So our weekly kickoff high here, 1851, somewhat pivotal for us today. I want the market, if I'm short, to stay down below that. If we start to look above, we may have we may kind of spoil the party for the downside and see price move back up towards settlement. Euro. So similar situation to gold. Strange enough. Yesterday we had low volume and an inert change in open interest. By inert, it was only an additional 600, which isn't all that powerful. So again, we started to suffer on the upside auction. We've got a reversal situation going on here, and the fact that we may end up with a bearish engulfing pattern and then back down below an important inflection level like the weekly kickoff high at 106.80. What else do I have here? Let's take a look at the 30. So we've got all kinds of overnight shorts again. We've got all kinds of overnight shorts below an important inflection level like the weekly kickoff level. All of these overnight shorts are looking for continuation. They want to see this market continue to the downside, and acceptance back above the weekly kickoff high might be just enough to scare them out of those shorts and push price back up towards this level, which would give us the opportunity, really, if we're looking to sell strength, would give us a better trade location if that were the case. So that weekly kickoff high, again, just like gold, is somewhat pivotal for us today if you're trading the euro. Into the 10-year. Relatively central in weekly kickoff range. We're sitting here waiting for new information in longer time frame, it seems. Although yesterday we had a little bit of an increase in volume, and that's impressive because we know that we're in rollover and that tomorrow is the scheduled roll for the treasuries and for gold. So the fact that we brought in more volume yesterday in the current front month, which is rolling over, I thought is kind of impressive. We also added 43,000 in open interest overall. Now, this all can be part of rollover, but it's just kind of impressive that we broke out of this area of balance that we were in for 3 or 4 days, closed up there on higher volume and increased open interest. If we weren't in rollover, I would say there's a pretty good probability that this market could continue to roll higher, although we know that rates are going to eventually roll higher. A lot of this, I believe, has to do with some weakness in housing, kind of keeping rates reasonable for the time being. So here we go. Here's the 30-minute chart. So yesterday we had a big spike to the upside. I think a lot of that is where the volume and the open interest came in, took us above last week's high. Last week's high was supportive last night. Kind of strange how that happens. Overnight inventory, a little bit to the long side. The overnight high, which we just kind of took out and failed above, was looking at yesterday's high and the last week's high as kind of areas where I would start to look for fish. Now we get a little spike to the upside here, but we're back inside range from yesterday. I think this offers an opportunity for us to limit risk. I think the last week's high also offers us the opportunity to limit risk. So we might be looking for some fish up here. Direction is, of course, unknown. We don't know which side to fish off the boat. And the natty gas. Natty gas already breaking out that swing high we talked about earlier in the week, this $9.05 swing high from the 6th of May. Yesterday we added only 700 in open interest, but we had a pretty good increase which in volume, which may also still be related to rollover, but volume and an additional 700 in open interest indicates that the auction process is still maintaining decent health. Here we are. Here we got basically trading in a straight line. Yesterday we did add some open interest. We've broken out and taken out that high of that swing. That kind of complicates things if we're just getting into trading this morning. This high here and that 1905 high right here from the 6th, I think offered some pretty decent opportunity, and we walked right through that. If this market gives us the chance to come back down to that 1905, might be an interesting area for an entry, an opportunity for us. So, all right. It's a challenging trading day. It's a challenging day in the world. I apologize if I got a little bit emotional earlier, but this all has to end. So keep praying for peace, please. Thanks to all of you that joined me for group coaching or for Make Hogue Money yesterday. We had a good day. We made some good money thanks to our good friend Matt Hoyt, who I see is here. We had our good friend Rob Crust and everybody who voted for the trades yesterday. We had a good, successful day. Looking forward to seeing everybody at group coaching today at 1 o'clock. Let's take our deep breath. I think I may take 2. And get out there and profit today. We all can do this. We are all good at this. It's just a very difficult thing to do. Keep your lens consistent. Do your homework consistently. Do your journal consistently. If you want consistency out of the marketplace, you're going to have to bring consistency. So get your pen and paper, pencil and paper, your keyboard, whatever it is. Make sure you account for the things that you do today, and keeping a good accounting of the things that you say you're going to do today. Consistency in process and consistency in review helps bring results, and we're looking forward to all of you being successful. It's a lofty goal, but I think we can do it, especially with you guys. Get out there and profit today. I'll see you in the proverbial trading pit here in just a couple of minutes. Continue to pray for peace. Pray for those who've lost. Pray that you're healthy. I know I pray that you're all healthy. Pray for everybody. And have a great trading day. I'm looking forward to seeing you for group coaching. And again, at the end of the day for the market recap. We'll see how everybody did and see how these markets fared out for us. Get out there, trade well today. Have a wonderful trading day. And keep praying for peace. It's all we can do. Have a great day.